Consumers are still spending, especially on travel. Marriott is expanding its luxury hotel portfolio with 3 new locations in the U.S. I have Anthony Capuano, Marriott CEO, with me in our Yahoo Finance New York studio. Anthony, always good to see you.
Good to be back.
So talk to us. Let's start on the demand for leisure travel. What are you seeing from consumers? I think coming out of your most recent quarter, things may have slowed down a little bit, but what are you seeing now?
Yeah, I mean, a little bit, but what was encouraging to me when I looked at the data in the first quarter, not only did we have continued strength across geographies, but across segments. Group continued to be the standout. RevPAR was up about 6% in the quarter, but leisure was still up 4%, and that's building on historic highs. So we continue to see strength in leisure. And then when we look into the summer leisure season, we're up a couple points on forward bookings for 4th of July here at home.
Is that U.S.? That's U.S.
That's U.S. But then when you look at outbound into especially Western Europe, France, Italy, Spain, Greece, last summer was a record summer, and we're up 7% on forward bookings.
How do you explain, we just heard some really bullish indicators too from some of the airlines coming out here with good results. How do you explain this continued strength in travel in the U.S.?
Well, I think even prior to the pandemic, with some of the younger demographics, you saw this spending shift away from consumption of hard goods towards experiences. And it certainly appears when we look at that credit card spend data that the pandemic acted as an accelerant for that trend across demographics. If I play amateur sociologist, I think people during the pandemic recognized, I haven't bought another watch or pair of shoes or handbags, and that's okay, but I sure miss travel, and I'm going to prioritize my disposable income on experiences, whether that's vacations, family reunions, visiting friends, immersing yourself in new cultures. There is a strong and almost insatiable appetite for those sorts of experiences.
So given that outlook, where are you building some of your most important hotels or converting them?
Yeah, well, everywhere. I mean, we had a couple really exciting announcements at the luxury end of the market just this week. We're converting the Turtle Bay Resort on the North Shore of Oahu, which is a stunning hotel. Blackstone did a massive renovation of that hotel before they sold it to Host. Host will convert that to a Ritz-Carlton. And then in Southern California, in Newport Beach, we're very excited. We reached a deal with the Irvine Company and Donald Bren to convert the Pelican Hill Resort to a St. Regis. So we're seeing lots of resort activity, lots of conversion volume, but at the same time, we're recognizing there's a value-focused customer at the other end of the spectrum, and so we are rolling out additional platforms in the mid-scale tier.
What does pricing look like at those value ends of the spectrums? I think there's so many people focused on inflation and how everything seems to be going up. What does the pricing look like?
Well, it'll be the most moderately priced range of products we have across our 30-plus brand portfolio. And so we've got 4 Points Express rolling out across EMEA right now. We've got City Express, the acquisition we did down in Latin America. I was at the groundbreaking for the first Studio Res here in the U.S., which is an extended stay focused mid-scale platform. And then we've got a code name here for Project Mid-T, which will be a transient focused mid-scale tier.
There's been some chatter in the various lodging publications of how interest rates still at these levels are impacting development, but they're also can impact once loans on hotels come due. Now you have decades of experience in development. How do you see this playing out?
So on the development side, it's interesting. You and I have talked about this in the past. The vast majority of our owners and franchisees are long-term investors in the sector. They understand that it's cyclical. I don't think they're hesitant because of interest rates. To be sure, that squeezes the returns, but their bigger challenge is just accessing debt. The debt markets for new hotel construction are very constricted in the US and in Western Europe. There's plenty of available debt capital for existing assets, but the irony is when you talk to these lenders, especially regional lenders, their hospitality portfolios are the best performing assets in their commercial real estate portfolio. The issue is they're all wondering what's going to be imposed upon them by Basel III in mid-25, and so they're hesitant to do a lot of new origination.
Our company group bookings have been very important for Marriott. What do they look like into the back half of the year in front of the election?
So in the first quarter, we were up 6% year over year. We're approaching double-digit growth as we look into the back half of the year. And this is anecdotal, but I was just at an event we hold every year called the Association Masters. We had about 400 association meeting planners. And it was fascinating. Almost to a person, their frustration was finding dates and space. They were saying to our teams, can we book 7, 8, 10 years out?
10 years?
I know. It's remarkable. But what it speaks to is the strength of that group demand.
You're a world traveler. You basically live out of a suitcase. Since we last spoke, the Biden administration put new tariffs on China. Mm-hmm. When you go to China and talk to your customers over there, how are American companies viewed? Are they getting concerned about any potential change in the White House?
Well, I was in China just a couple months ago. U.S. political scene is about the only topic anybody wanted to talk about. I wanted to talk about demand. Yeah. I wanted to talk about
new ways to get inside the room, with your phone.
And they all wanted to talk about my perspective on the election. As we've discussed in the past, one of the really great things about our China business, which is our second biggest market, we have a little over 500 operating hotels, another 400 in the pipeline. Almost the entirety of that portfolio is Chinese owned. And so it is, I think it insulates us a little bit from some of the friction that exists between the two governments.
Do they still have confidence in the U.S.?
They do.
It's good to hear. All right, Marriott CEO Anthony Capuano, good to see you. Good luck with the Hospitality Week.
All right.
Appreciate it.